Okay, it looks like we're live. Um, Hello, everyone. For those of you in the UK that are mothers and watching, Happy Mother's Day. It's not Mother's Day anywhere else, but it is here. There's Rudy. He's watching. And Let me know if you can hear me. Yeah, Endurorama's here. Beefy Farmer. Keep your car fuel tanks full. Yeah, actually, I filled up my tank a couple of weeks ago when the war started, and it was down to half. So this morning at 6:30, when I went to play golf, I filled it up. My wife's car is pretty full, and I think it's going to get more expensive. I agree. Just AB Esquire says, good evening, Maneko 64 and Rudy. Greetings from the Scottish borders. Well, we're going to have Dario from Just Dario. I've interviewed him before. He's coming on. And hopefully Clive as well. He was going to try to make it because we're doing this an hour earlier, uh, mainly because in the US and Canada, the clocks have gone forward. So I wanted to legislate for that. So it's 7 p.m. here in the UK pretty soon, but it's 3 p.m. Eastern time in the US. So the title today for the live stream is "The Longer Iran Holds Out, the Bigger the Prospect for a Global Economic Meltdown." Yes. And I don't want to be alarmist, but I think there's a big threat to the world economy from what's going on in the Persian Gulf or in the Middle East. Uh, Add a handy 1926 expectations with gold and silver this week. I don't know, but my expectations longer term is still lower dollar and lower fiat currencies. So more currency debasement, more inflation, and the threat of hyperinflation. So I don't care what happens really this week, this coming week in gold and silver. I don't trade. Yes, the miners have come down, and my portfolio has gone down in value, but I'm not worried. If anything, I want to load up on more miners in April. That's when the tax year starts. So yeah, I can't tell you where gold and silver are going to go in the short term, but I think in the longer term, it's going to go a lot higher. Noon on the West Coast is here. Uh, Ak Bay Nguyen. Good evening, Mario. Hello, everyone else. Hi, Hio Silver is here. Dilwyn Roberts, will Iran will hold out? No doubt. I think so. It reminds me a little bit of David and Goliath and Iran being David, right? I think Trump and the US administration and Israel or Netanyahu, they expected the regime in Tehran to collapse. And yeah, they thought it was going to be like Venezuela or, yeah, but it's proving a lot harder. Someone mentioned Netanyahu about him having bitten the dust. I don't know about that, but yeah, he hasn't been seen in a long time. There's no point in really speculating, but if it's, there's very little news coming out of Israel. It's highly censored over there. So we don't really know what's happening. Oliver Clifford, the world economy was on the edge already. This is just pushing it over the edge. I agree. You look at US GDP, it was almost flat for the fourth quarter. The jobs market in the US is going down. The stock market has topped, and the banking sector is in trouble. The shadow banking as well is in trouble. So this might be just the trigger. And of course, they're going to say that this is what led to the collapse, if we get a collapse. But I think it could be a trigger for something a lot more serious. And we're going to wait for the other guys to come on so we can talk about that. Tijan Tunali, Hormuz open for all except US and Israel, and for those who are trading. Yeah, I mean, there's a lot of comments about the Strait of Hormuz. There's another strait, I forgot the name of it, that gets you through to the Red Sea that's supposedly going to be closed off by the Houthis. Uh, and yeah, but as Secretary of War Hegseth said, the Strait of Hormuz is open. The only problem is that the Iranians are like making it hard, right? That was a really weird comment. Christine, V4S, when will gold and silver go up? Well, they're already up quite a bit year to date. So I don't know when they're going to go up. But as I said earlier, I expect fiat currencies and the dollar to continue to drop against gold. I'm not concerned. Fundamentals haven't changed. If anything, they've gotten worse. Hi, Dario.
Hello, hi
How are you?
Manuel, happy Sunday. All good.
Good.
Enjoying some European cold before I go back to Hong Kong.
Yeah, it's cold here in London as well. I mean, it was sunny today, but very cold and windy. It doesn't feel like it's almost spring, but that's the way things are. I already started, so some people are asking Dario where I see gold and silver next week, and I said I have no idea, but longer term, I'm still very bullish because I think the fundamentals haven't changed. You know, they're going to have to continue to inflate the system. It's inflate or die. Is that how you see it?
Yeah, like the price to be fair is not about the next week. What I will say is like what happened so far in the past 2 weeks has been, in my humble opinion, completely nonsensical, to be fair with you. Um, we saw gold and silver opening up significantly. The Monday when trading resumed after the initial strikes in Iran. And since then, they have been like going down. And in the way that we are used to, I mean, is is to a point that is frankly ridiculous, to be fair, because especially in a situation when volumes are so low, you can really like
Yeah,
spot the shenanigans very easily. What I realized are two things. Of course, like all I'm saying, it's you know might feel like a little bit overfitting the price action, but sometimes the most straightforward explanation are the one that I believe can give an idea of what's happening in the short term compared to the medium long term, because I agree with you, nothing changed. And as I posted like yesterday, there is an incredible paradox ongoing right now, especially in the silver market. We saw an incredible amount of March 2026 silver futures, both in the open market for immediate delivery, like 2,000 ounces within the settlement month. Sorry, 2,000 contracts, so 10 million ounces, while the price keeps going down. And overall, you see the shortages of physical silver, the drain, continuing, carry on at the COMEX in Shanghai and so on. So on the other side, the price keeps going down, and you might try to justify with algorithm betting on the central banks and Federal Reserves hiking rates because of inflation. The US dollar strengthening compared to other currencies. Some people keep claiming that there might be liquidity issues in the market, and I said several times, despite the very bad situation of the financial system, and as a matter of fact, the bet on the Fed and other central banks hiking rates while a 1.8 trillion market that is private credit is already started to implode.
Yeah.
It's not me 1 year ago, 2 years ago, warning people saying it's going to implode. It's already started.
Yeah.
Multiple funds have been flooded with requests of pulling out capital, and all these requests have been gated, and only a limited amount of capital has been returned to investors. So the situation is already like of this sort. And as a matter of fact, bank stocks have been going down significantly
Yeah. I agree.
in the
Yeah.
past month. So, I mean, if anything, like I see the odds of cutting rates, if not even an emergency rate cut, because of problems in the banking system. But with regards to liquidity, I would like to remind people that there has been a change in the Federal Reserve standing repo facility borrowing rules last year. Before, the daily borrowing limit was $300 billion. That daily limit from that facility has been scrapped. And now the limit has been assigned to every single counterpart. There are about 20 counterparts in the standing repo facility. And these counterparts can borrow, if I'm not wrong, up to 100 billion per operations. There are 2 operations a day. So in the blink of an eye, the Fed can inject in the system like over $2 trillion if needed. And and as a, again, proof that there are not really liquidity issues right now in the system is that the standing repo facility and other repo facilities have not been used
Yeah.
yet,
Yeah. Yeah.
despite, we saw it spiking at 70 billion at some point. So clearly, the narrative is about liquidity, whatever. I just believe that what we are seeing right now is a combination between constant price suppression, because I mean, all these people, they have to source silver as cheap as possible to close their short positions. I mean,
Yeah.
and I posted a video this weekend highlighting the incredible situation coming in China, because in China, the April 2026 contract, there are roughly 42 million ounces standing for open interest, and only roughly like 10 million ounces left at the Shanghai Future Exchange.
Yeah.
But because of the change of rules with regards to the quota that people will be assigned for physical delivery on the near-term contract, and this application on the quota needs to be done well in advance, and the quota have been placed since the last trading day of February, we can have a strong assumption that that open interest already there is for the good part of traders in industrial enterprises that needs to have the physical. So we are in a paradox in silver, but similar is happening to gold. If you compare the open interest at the COMEX and in other exchanges to the physical, the left at the COMEX, same situation, but not even like just limited to silver or gold. You can see it overall across precious metals, but commodities. And I'm happy to leave it to you and
Yeah.
you have to answer the question. But 2 weeks ago, I flagged as something very weird, all out of the blue. No one's talking about that, but I said, guys, there is some issues with aluminum, and people were like, what are you saying? Like, "Why aluminum? Come on, aluminum is so common, it's so abundant out there." But that weekend, I was doing some research, and I realized that the reserves of aluminum at the exchanges are almost gone. At LLME at that time, there were only 2 days of physical aluminum left. And now you start to see all these shortages around. And in my opinion, the drain all across these commodity exchanges is driven by the fact that prices are too low. They
Yeah.
are kept too low.
Yeah.
So
And Daria, I heard as well that even in the Middle East, crude oil is actually going for 140, real crude oil, not 100. And Clive, welcome. How are you?
Hello, good evening, everybody. Nice to see you.
Nice to see you, Clive. Before
Hello,
we
Dario.
Before I go further here, just wanted to thank Mr. Shovel from Denmark for your super chat. And then we've got another super chat from Nons 975. He says, do you think Besant was pulled on the emergency call over the U1 for oil deal or possibly the SWIFT system being hacked? I'll let Clive answer that one. Did you see that?
Now you'll have to fill me in, Mario. I didn't see that.
Yeah, well, Besant was doing an interview with a guy from Sky News, and he was interrupted by someone because President Trump wanted to see him. And he was, well, he was in a meeting with President Trump for just over an hour. He came back, he looked really nervous, like he was shaking. And there's a lot of speculation why that was. Some people say it was because he was told that Netanyahu had been, had expired, or well, this person thinks that it's because there's an emergency call over the U1 for oil deal. That could be it. I mean, I spoke about this yesterday. Uh, the Iranians are saying if you buy our oil in U1, you can go through the Strait of Hormuz. So, yeah, what do you think, Clive?
Well, the Straits of Hormuz are effectively shut, and I don't know, even if I was a Chinese ship with so-called guarantee of free passage, I think I'd still be pretty nervous at this time because there's a lot of fireworks being thrown around, and who wants to be the first to test it?
Yeah. And Clive, the title of the live stream is The Longer Iran Holds Out, the Bigger the Prospect for Global Economic Meltdown. And I think what Daria was saying about shortage of commodities is very serious because that could be the trigger. What do you think?
Well, yes, Dario and Mario, two areas. It's all about duration, duration, duration now, and how long this conflict lasts. I mean, we were told a week ago that it was as good as over. They'd won the war, but it seems that it's not yet quite won. And now I heard today that President Trump said it could be another 2 or 3 weeks before it's finished. Well, we'll see about that. But yes, it's on commodities. I was just looking. Broadly speaking, all the commodities seem to be on the up and up, and of course that does include gold and silver since the 1st of January, anyway. So I think Dario is right. The direction of travel, whether it be for aluminium or nickel or copper or gold or silver, I think the general trend is upwards, and the prices are, as he said, too low.
Yeah, and I think before I let Dario chime in, uh, gold and silver are still up on the year. Yes, the Monday after the war started, gold went up to 5,400. I think silver got up to like 96, and they have come off. And all the focus has been on oil, and I think a lot of traders and speculators, they're just trading oil versus gold and silver. And also this talk of commodity, sorry, not commodity, but demand destruction, deflation. I think that's all I think that's a mistake, and eventually gold and silver are going to turn around, and it's going to be, and and that's why I don't trade gold and silver because I hold it physically. But even the miners, I'm not trading. I'm holding on. If anything, I want to add on to it because I think once it turns, if you're not in, it's going to be really hard to get back in. Is that how you see it, Dario?
Yes, I totally agree. Like I suggested many times, like this is not really a market that you can trade, although it's a market that is becoming increasingly mispriced. And I have an example here on oil. I think it's the easiest one right now to understand. When when the war started, oil opened at $75. And the first thing that it did, it went down. Like we went below 70. And I was there like watching at my screen. And I mean, there are like, people like, making all sort of like analysis, and a lot of people try to explain the price action. But as a matter of fact, what I said at the time, it was very simple. It's like the situation is already worse than what it was 1 year ago. And 1 year ago, the price like went all the way up to 78.4 when effectively nothing happened. Like last year was like saber rattling, effectively. So, and till Thursday, the oil price went completely nowhere while the strait was already closed, the oil facility were already hit, and you could already start seeing that, objectively speaking, the level of damage done was just simply higher than last year. You would have argued like, okay, it would not have been like much higher than Ukraine or whatever. Although I disagreed, because a lot of people were saying, oh, there is so much fog of war, like, oh, this is a fake news, not possible. Why they are attacking Dubai? Why they are attacking Bahrain? Like, no, it can be AI. But at the end of the day, ultimately, you see the chart of oil, and they were clearly trying to keep the price within the multi-year downtrend that has been like quite well established since the Ukraine war. And in the moment it broke is when the market started to turn around. And then between Thursday and Friday, we had the first run up with a big spike into Monday. So this is a market, and it happens on gold, on silver, on everything. This is a market that overall has a big problem, is very passive. There is a lot of passive investing, a lot of like ETFs, a lot of benchmarkings. So, and then the other problem is what is not passive is basically momentum trade, algorithmic trading that emphasizes the moves on the way up or down. So there are a lot of mispricing all around. We know that the fundamentals are totally broken. We know that there is going to be a lot of inflation down the road, like literally a lot of inflation. And the prices are all over the place. I don't want to speculate that much about like, manipulation and so on this front, because, we already touched upon it. But, I had so many people like asking me, like, this behavior that doesn't make any sense. Why energy companies for the first 2 weeks went completely nowhere? Actually, some went down. And then they started to move, I believe, on Thursday last week, when JP Morgan came out with a report saying, well, you know what? This might be lasting longer than expected. The oil price might be resetting to a higher level. It might be wise to buy energy and, short the
Yeah.
index. And then things started to move.
Yeah,
I
so
mean,
here's that chart you're talking about. This is WTI crude. And yeah, it had been on the downward trend since 2022, falling wedge, and it's broken out of it. And yes, we've come down from like almost 120, but it still looks very bullish. Clive, some people are saying that your volume is not high enough. Could you?
And how's that now?
Oh, that's better. Yeah, yeah. Any thoughts on
Well, yes, I did see that today. The International Energy Agency said that this is the largest supply disruption in oil's history. That's their comment. So if that's true, we're in for a considerably higher oil price. I mean, it does depend on how long this conflict lasts, but I don't think anyone's really expecting it to end very soon, except for Mr. Trump.
Yeah, I mean, Trump the other day, and I'm not, I don't want to go too political, but he's all over the place, and I think he's concerned because it's taking a lot longer. He said Iran is finished, we've destroyed them. And then at the same time, he asked the Chinese and the UK to send help to ships to the Strait of Hormuz. But my question is, if Iran was in such bad shape, why does he need help? But anyway, there's a super chat here from After the Gold Rush. Thank you, After the Gold Rush. Thoughts on Eric Young's or King Kong 9888 scenario of less sour crude exports significantly reducing sulfuric acid production required for refining most metals. Well, I mean, there's a lot of other things. I mean, petrochemicals are used for drugs, like prescription drugs. We see that natural gas is used for fertilizers. I mean, everything is going to be affected. Um, Clive, any thoughts on that?
Absolutely. Petroleum products go into just about everything we touch. Not only are we talking about the transportation, we're talking about the manufacturing of most goods which contain some sort of plastic. Look around your desk, Mary, you'll see half the stuff on your desk has got plastic in it somehow. And, that does mean that there will be a cost component coming in. They just had the consumer price index, which came out well above expectations as usual. But that they said that was at the end of February. It does not take into account any impact from the oil price rise, which happened after they finished the calculations.
Yeah, I wanted to ask you guys. Start with Dario. Don't know if you guys have read this book, When Money Dies. It's about the German hyperinflation in the 1920s. And there was an event there that I'm going to bring up now on ChatGPT. I mean, it's in the book, but I went into ChatGPT and because I think this event could be similar to what's going on now in the world with this war in the Middle East. And then I'm going to bring up some charts. So my question was the Ruhr Valley occupation crisis in 1923 and how it triggered the collapse of the Reichsmark, right? So it says here the occupation of the Ruhr in 1923 was a turning point in the economic collapse of Weimar Germany. It directly triggered the final phase of hyperinflation and the destruction of the German currency, the Reichsmark or Papiermark. And it says here, background, World War One, all the reparations, all the debt, and then the occupation, what that did by France and Belgium occupying the Ruhr Valley in January 23 was, Germany, that region produced 80% of Germany's coal, 50% of its steel. It was Germany's industrial heartland. And what Germany did was basically go on strike, right? Refused to cooperate and at the same time they kept paying the workers and then they tax revenues collapsed and then they started printing money, right? And then and here you have for example how many marks per dollar, and you have to remember the dollar back then was as good as gold, right? So it was at 18,000 in January 1923, and by July 1923, $1 was 350,000. So my question is to Dario first. You know, this is, of course, the crisis here is much bigger, in my opinion, because this was just Germany and the Reichsmark. But I think the disruption of the energy sector because of this war could be the trigger for the dollar hyperinflation. Um, do you think that's possible?
So hyperinflation in terms of the Weimar German, I would say not into the immediate future, because I mean there are the midterms election. Trump is like 2-year term and whatever, and that type of currency hyperinflation, effectively happen because of the conversions of very specific economic circumstances that effectively led the government to print a ton of paper very fast. At that time, like people were not really buying government bonds. The government bonds market was non-existent. While now the government bond market is huge. And what I keep telling to people is like people keep thinking like as bonds as different to currency. But in reality, like government bonds are simply like currency in the future.
Yeah.
So when they say, oh, but that's debt, I mean, so what are they going to repay that with? Oh, the wealth of the country, whatever. It's currency in the future. You're simply going to wait for it. Okay. And as a matter of fact, one thing that I find appropriate in the past 2 weeks is the yields went up rather than down. So there was not like flight to safety into government bonds. However, what I can see happening is like currency volatility into those countries that are major importers of oil and commodities. And one country is there already, like standing on the brink again. It is Japan. And in all fairness, Japan is an incredible example of, in my opinion, of market mispricing. And I want to compare it, like many times I compare it to Turkey. Turkey was like $4 for Turkish lira per dollar. And then it went to 7. And I remember as everyone at that time was like, oh, go long Turkish lira. Bonds were yielding like 7, 8, 9%. It's like it's a no-brainer. Like they're gonna, it's enter G20, the economic is roaring and whatever. What they miss was the like 31st, 40, 60, and then like incredible inflation into the economy that currently is just tamed nominally because effectively they capital controls.
Yeah.
And now I think it is like 42. I mean, Japan right now, the only reason why Japan currency it's still standing where it is, even if it is lost a lot of value, is simply because they are the largest holder of treasury reserves. And the market still assigns value to that. But paradoxically, and I said this like the first time, like 2 years ago, like if they defend the currency, selling reserves, paradoxically, they are gonna weaken their currency even more because their value of the currency is pegged to those amount of reserves. It's like it's an incredible vicious circle. So there will be higher inflation. I don't expect like in the US, like the type of like 100 or 200% type of hyperinflation simply because it's a different dynamic. Like there will be this type of inflation will be spread out in the future because of government debt. So it's gonna be postponed. And then if they want to cap the yield as they've been doing successfully with the treasury buyback program, that inflation is going to trickle somewhere else into like financial markets, into the economy, into other buckets of the economy. But the ultimate yardstick of the real level of loss of purchasing power across the globe is gold.
Yeah, I
And
agree. Yeah.
so we cannot measure anymore, um, you know, hyperinflation of the US dollar against to
Oh
what?
no,
Yeah, so we
I
say
always
gold.
I always look at it as in terms of gold. And just before I allow Clive to chime in, I just want to show this. I've been comparing these charts for a couple of
Yeah,
years now, and that's what hyperinflation is when the
exactly. Yeah.
currency collapses versus gold. And here this was the Ruhr Valley crisis uh, before gold started taking off versus the Reichsmark. And here we are, the Iran war crisis. And I think, Dario, even if we don't get the CPI going up 200%, because they're probably going to you know, tinker with it, right? What I think this is telling us is that the dollar and all other currencies, including the yen, in about 5 years, you're gonna need like $30 to buy, a Starbucks coffee. That's what I think this is saying. So I'll let Clive chime in now.
Well, I just if we go back a year or two ago, Mario, we were talking about the government debt increasing by about 1 trillion a year, and if we go back maybe 6 months or so, a year ago, we were talking about it increasing by 2 trillion a year. Well, I just read today, and I don't know if this figure was correct because I passed over very quickly, that over the last 12 months, the government debt, the US government debt, has increased by $2.6 trillion. If that's correct, it's accelerating at a very, very fast rate, especially where we're seeing GDP falling. We've now got an annualized, based on the last quarter, we've got an annualized GDP growth at the rate of 0.7 per year. Yet we've got the government debt increasing by about 8% a year at the moment. We have the interest on government debt increasing at an accelerating pace. Go back 5 years ago, it was about 3 to 4% of GDP. Now it's around 13% of GDP, and all the forecasts, including from the Congressional Budget Office, is that that number is going to continue to increase because the average interest rate on government debt is about 1.5, 1.7%. Yet they're having to refresh that debt as it matures at a rate above 3%, 3.5% at the moment. So all the signs are that government debt will continue expanding. And I take the view, and I think I kind of got the impression Dario agrees with me, that actually in the modern world, government debt is the same as money. It's kind of, whether we talk about treasury bills, treasury notes, or treasury bonds, because you can turn them into cash instantaneously, even though it's only a future promise to print money, to the average man in the street, it's as good as money. So when I look at the money supply, I don't look at the M3 or M2 or M1. You can't look at M3 anyway because they've stopped publishing that. But look at M2 or M1. I don't look at that anymore. I say, what's the total of government debt and the cash in existence? And that number is increasing by 7 to 8% a year in the United States, and that number is going to keep accelerating.
Yeah, and I think also with what's happening now with this war, a lot of countries, especially the non allies of the US, they're gonna accelerate the purchase of gold, and they're gonna buy less and less treasuries. And like Dario said, the bond yields have gone up since the war started, and I think uh, that is concerning because the higher bonds go, the longer this war lasts, the worse the fiscal situation is going to get. Before we continue, there's a super chat from Chris Conman. Thank you. He says, with silver's current wedge pattern, do you think it will most likely head lower first, testing its lows before ultimately going higher? Well, let me bring up this chart, right? And then I'll let Dario chime in on the technical picture for silver. So I think this is what Chris is talking about, this wedge here. And I've been talking about this wedge here as well. And of course, Dario, I mean, I noticed the last few days, during the early European hours, gold and silver were doing well, and then the U.S. comes in around midday, 1 o'clock Europe, and everything falls. So yeah, we're hanging. It looked like this triangle might not play out, but I don't know. What do you think, Dario, and then Clive?
Um, to be fair, I feel that in the short term, we are in such a precarious situation and a volatile situation that this pattern and consideration for the short term, of course, it's important to keep an eye on them. But on the other side, you just need a headline. You just need a sneeze or something in the market for things to quickly turn around. And in the case of gold and silver, in the case of silver specifically, we know, I mean, everyone is tracking every day how the physical is disappearing, how the physical behind the ETFs is effectively being drained. Like the physical ETFs are not holding at the moment nowhere near the ounces that we were having like in 2011, if I'm not wrong, when there was the last. So yes, this pattern are surely something that the algorithms are following, are surely something that whoever is very adamantly and successfully so far painting the tape, because I believe that that is what's happening here. That they're painting the tape in order to give an impression and to try to build a narrative around that. If the whoever is, they can carry on, they can get momentum in the market, whatever. But I've been holding like physical, and I've been telling like people for a while, like if you try to trade this market, you end up being burned. I mean, you are not even trading against a casino, okay? You're trading against someone that can rug pull you all of a sudden. And I noticed something in terms of sentiment. The sentiment right now on silver is quite negative. Even like, the long-term silver like bulls, they all like now talking about like crisis or it's going to retest $50 and come back. And I'm like, okay, first of all, that's paper price, because I mean, if you try to get physical, like the spreads are still incredibly elevated.
Yeah, and in Shanghai it's like $94 on Friday,
Yes,
and
exactly.
SD bullion is over 90.
And that's exactly the other thing. Like, why the spread, why the premium with China is not coming down? Why that is not coming down? And everyone has his own theories. It's like, oh, but because the refineries are like stuffed, they cannot process that much to turn into 99.99 or whatever. The truth is that, I put on around the example of nickel a while ago, of what can happen in a moment when, a market turns around on its head. Okay. And that, personally speaking, that wedge can be broken on the way down. They might be trying to paint a collapse, whatever. But to be fair, I mean, there are so strong tailwinds behind everything that has limited supply because of monetary inflation down the road, being created for the money printing that will be required to finance this war, to plug the disruption that will be created by this war. And the market is still overlooking the crisis into the private credit sector. So, like the last time the Fed was in emergency mode, the balance sheet expanded to like 8 trillion. Like the 800 billion required to bail out Lehman looks like peanuts right now. So, I mean, clearly the volumes are very low also. So this kind of like games are incredibly are easier. And allow me to say this, I hope I don't steer the pot here, but Jane Street was caught by the Indian regulator and actually by others regulator. So what their winning and their consistently profit-making strategy was effectively to target very illiquid benchmarks. Okay, they were building position, and then they were opening very large positions in the derivatives market. And because that benchmark was illiquid, they could move it like very easily. Okay, dumping shares in the benchmark or buying shares in the benchmark with a magnifying effect into their derivative position. And we know that all of a sudden on the 31st of December, these folks bought 3% of the SLV. And if I'm not wrong, they bought I'm not sure if they're the largest holder, but they bought a significant amount of GLD as well. And then is when this very odd moves started to begin. So clearly there is a picture in the paper price, there is a picture in the chart. I don't disagree with that. But again, as you said, if any dump, I mean, what's happening now with any dump is that people are buying more and more physical. The physical is leaving the exchanges, it's not coming into the exchanges for people to get rid of it. It's the opposite. So if any like paper price manipulation so far has been used by those who understand the medium and long-term picture to accumulate or get out of shorts rather than, effectively like panicking and dumping everything. Furthermore, I would like to say one last comment. One person make me notice is like, after this oil problem that is becoming like bigger and bigger, what do you expect is going to happen? It's like there's going to be a massive push into electrification, especially in those countries where they don't have the resources. And in China right now, there are already like 38 nuclear reactors being built, and they are the biggest producers of solar panel. And if you go around, like there are all these like, they're really wiring the country to run almost completely on electric vehicle. Like the charging stations are like spreading like incredibly, like everywhere, like nowhere like it's Europe and US. It's like it's almost non-existent compared to China. So if anything, like from a monetary level, from an inflation level, and from an industrial level, I mean, the fundamental picture never changed. You can see that in the data. And all these like short-term moves, to be fair, are, you know, shenanigans that they may last. But clearly, if the demand was not there as people portrayed, as it happened before, the price would have already crushed to the floor. And that didn't happen.
Yeah, Clive, what say
Well,
you?
well, we're talking about the future silver price. I think a lot depends on your time scale. At the moment, I've been looking at the chart, and I think that the chart has broken down to the downside on silver. And I'm using that as an opportunity to acquire silver myself. I think it will go lower, but I don't know that. But I don't think it's going to stay lower. I think it's going to go lower for a while. Then we will have the supply demand of industrial use kicking in, which will push it much higher than the all-time high. But I think we have this sort of downward swing, which is an opportunity for those who want to have some more silver. I'm one of them to buy some. I just bought some a couple of days ago, and I'll be buying in the next few weeks as well. But I think the long-term trend is, first of all, if we look at the solar panel market, the amount of silver being used in solar panels has more than doubled in 10 years. So there's a significant increase in that. The electrical industry, as Dario mentioned, is growing and using more and more silver. And as we go into smaller and smaller circuit boards, the need for the purest conductors augments. So therefore, we will see a continuing increase in silver usage in electronics at a time when we know that for the last decade, the silver production has continued to fall almost year on year, despite the higher price. The reason we know the reason for that because most of the silver comes as a byproduct of other things. So in my opinion, it depends on your time scale. If your time scale is long, you don't have to worry about whether you could get it $5 cheaper or $10 cheaper or $20 cheaper. We don't know that. You might not. What you have to, if your time scale is long, you could just accumulate slowly, little by little, and you might get some cheaper than today. You might get some more expensive. It doesn't really matter. But if your time scale is short and you've borrowed money to buy silver, well, you're going to get cut. You're going to get burned because I think it goes lower in the coming days. I mean, obviously, Friday is always a smackdown Friday. We just had that. All too common. So probably it will open a bit higher on Monday, I guess. But I do see a downtrend for a little bit now.
Yeah, I personally, yeah, I'm not concerned because in the last year or so, both in gold and silver, when you see these smackdowns, and I've been seeing this for over 20 years. In the past, they used to last months or maybe a few years. Now it's a matter of days. So I'm not concerned. And some people are saying that EVs are not really popular anymore. That might be true in the West, but I think in China, they're really pushing for EVs and
Yeah,
maybe even,
Mario, I was in China in October, and we saw that approximately one in every two vehicles was an electronic vehicle. You could tell
yeah,
the difference because they have a green number plate for the
yeah.
electric ones.
And I think maybe other countries like that are going to be affected by this oil crisis a lot, like in Asia, like Japan, Korea, and others. They might be pushing for that as well. Maybe not in the US or in the UK, but I'm not a fan of electric vehicles, but I think with the population of 1.4 billion, that's going to make a huge difference for China. Silver Drill Pickle, thank you for your super chat. So yeah, yeah, I just want to wait till also to April because here in the UK I have you have tax-free accounts that you can only put a certain amount each year for investing in the stock market. So I have to wait until then to put some more money to work, and I'm gonna add on to silver miners, and I always try to buy physical silver as well. I mean, I'd been waiting since 2003 for silver to go over 50, and now that's over 50. Yeah, I'm not concerned. And someone said one of the comments that the fact that there's so many people bearish silver now is probably means we aren't near a low. So that's what I would say. Yeah. Okay. Let's have a look here. It's if you guys have some questions, feel free to ask. So we've got three people here. Let's see if there's any questions.
I just make a
Yeah.
comment, Mary, about the gold and silver miners. I was checking, not a lot of companies haven't yet reported their end of year profits to the 31st of December, but I did check, I won't say the names, but I checked 8 companies which have reported their profits since the 31st of December. Whilst all the share prices across the board are down very sharply in the last few days, nothing to do with the results, all 8 which have already reported profits are their share prices are above the, no, beg your pardon, it's 7 out of the 8 are above the price on the 1st of January. And in most cases, the profits were something like 3 times what they reported a year ago.
Yeah, no, I agree. And the thing is, and I think Dario was talking about that, everything is so volatile. There's so much fog of war, comments, probably, manipulation as well. I mean, the US government even said they're going to intervene in the oil futures market, and the CME, head of the CME said that's a bad idea. Interesting that he didn't say anything about silver or gold, right? But I don't like Keynes, John Maynard Keynes, but one thing he said is that markets can remain irrational longer than you can remain solvent. So as long as you're not leveraged, and you still believe in the yeah, in the story, and I still believe in the story because at the end of the day, politicians, central banks are not going to allow uh, deflation. And by deflation, I don't mean a slowdown in the economy. I mean the money supply, Clive, going down. They're not going to allow that to happen because they know that would bring down the whole system. So they're going to have to print eventually, and that's why I'm holding on. Is that how you see it too, Dario?
I completely agree with this. I mean, in all fairness, like the only thing these people know or to do in order to deal with situation is to print money, and this will continue till people will keep use their currencies. And I read about like you know speculation about like China like pegging the yuan to gold and things like that. Um, in my opinion, and I don't think that is gonna happen like you know in 10, 20 or 30 years, just for one simple reason is because the the Chinese market is capital control. They have 1.4 billion people, and like pegging their currency to gold eventually. And if they even make it redeemable, they will rush literally to get everything out of it. While what we see right now is effectively, even like including the 4 major Chinese banks, currently limiting, if not stopping, any subscription to gold investment product. Gold investment product that in China have been always been redeemable for physical. So now, effectively, in China, retail is being cut out from buying physical gold in investment sizes. And this, I
Yeah,
believe, it's a very strong signal that the market is ignoring.
yeah.
And if anything, this will impact. I mean, one thing that I keep saying is like the equation is very simple, and I said this the first time when the gold was at 1800. Is like in a historical period of monetary inflation, you have, you divide, you have a numerator and the denominator. The denominator, you have the supply of anything. It can be gold, it can be potato, it can be silver, whatever. And at the numerator, you have the increase in money supply. If the denominator, the growth denominator, is limited, or if doesn't even grow, while the money supply, the numerator increases, the nominal price is going to increase by definition whatsoever. It might be like having different impact left and right, but this is not going to change. And frankly, I believe that people in this market, in such a volatile market where trading algorithm can move prices, even of very large markets, of plus or minus 20% in the blink of an eye. I mean, $1 trillion stocks nowadays are moving like 10 plus 10 minus 10%, as if it's like a piece of cake. You would not, by the time that the market turns around, if you're not positioned by then, you will not have time to catch up. So like, I think this is the worst environment for people to try to trade the market, while paradoxically, if you have a medium to long-term view, is the best time to try to position in advance. And many times position in advance means to be a contrarian or to be a black sheep or whatever. I remember like when we were talking about like back in October and at the end of November, when we were saying silver is going to go to $100, everyone was calling me crazy. I'm like, man, it's not possible. Like, what you're talking about, and stuff like that. So it happens so quick that by the time it goes mainstream and people realize it's too late. So I would just say they will keep printing money in different shape or form, but the overall equation is the overall picture is not going to change whatsoever. We're going to have a new Fed chairman, a new ECB chairman, and whatever, but this whole house of cards needs to remain standing, because that's the only game in town.
I brought this up here, the M2 chart, because if you look pre-COVID, we were around 15.4 trillion or 15.5 trillion. And then we went up to almost 22 trillion in April of 2022. So that was the massive inflation. That was a 40% increase in the money supply, right? And that's what caused CPI to rise. CPI wasn't the inflation, it was the consequence. And we actually, guys, had deflation from April 2022 till December 2023. Actually, we had deflation, but the CPI kept going up because the inflation was so huge that even after deflating the money supply, prices are still going up. And now we're breaking out again. So I think that's the problem why I've always had problem when people use the term deflation and inflation the wrong way. Clive, what's your thoughts on this? Because I think it's going to start taking off again, the M2.
Well, as we often say, Mario, the inflation is a symptom of the inflation of the money supply. In other words, rising prices are the symptom of inflating the money supply. That's what what your chart is showing. But I don't, as I say, Mario, I don't just look at M2 because I think that's misleading. Because if the Treasury, for example, spends a lot of money buying, not Treasury, if the Federal Reserve spends a lot of money buying Treasury bonds, then that reduces or increases the money supply and reduces the supply of bonds. But if, on the other hand, they sell their bonds into the market, that can shrink the money supply whilst increasing the supply of bonds. So I think at the end of the day, we've got to add the two together to get to a real opinion as to the expansion of effectively money which is owed by the government to everybody.
Well, Clive, that burger there you had in the background for $970, when do you think that's going to happen?
Yeah, that was like I got ChatGPT to predict the price of everything about 10 years in the future. And I think we've got to about 10 years before we get there.
All right. There's a super chat here from Endurorama. Thank you, Endurorama. He has a question for the panel. Where would you value 1 ounce of physical silver? 999. I mean, 1 ounce of silver is usually 999. Intangible item, physical market tightness, east-west paper discrepancy, uh, price discovery resembles. I guess he's asking where would well, I think it's a lot higher than the futures or LBMA price or FX price because a lot of people don't realize in London gold and silver are traded as FX. That's why it's XAU and XAG. But I think it's at least $95 right now, probably more like 100. If you try to go buy an ounce of silver with a dealer, you're going to be paying above 90. Um,
The
uh,
premiums are very solid and high at the moment. I mean, they might come down when we see some stability in the price, but you're going to have to pay quite a bit over the official price if you want to lay your hands on any physical silver, unless you're buying through Comex and taking delivery.
yeah, Daria, I know you're in Italy right now, but you live in Hong Kong. What's the situation there for silver? I mean, do you pay, are you able to pay 80 US dollars for an ounce, or is it a lot
Oh
more?
no, of course, like not like the premium there are actually okay. They usually they're still between like 10 and 15%. But what is remarkable is that every year there is like the panda, from China. So and the silver like coinage from this year is actually going is it on sale for 30% premium. And I keep sharing like feedbacks with regards to silver. Actually, the OTC market and silver, industrial silver user are more and more aggressively trying to secure supply directly from the miners. This is continues being reported. I know people that have significant large inventories of silver and they constantly receive calls offering like 10, 15, even higher dollar premiums in order to, convince them. And no one is letting go. The latest like feedback I received like actually was on a video and that was coherent is that buyers in China of physical silver have been like actually gated. They've been capped for months now. So, but there is one interesting thing that happened. I went to Shuibei very recently in Shenzhen, and I noticed that there's practically no silver around. There
Hmm.
is like just some like PT jewels and whatever, and everyone is open to buy. Literally, like everyone. If you offer, they buy, and they buy at the Shanghai price. They don't buy at the Western price. That, that
Yeah,
that's what they offer,
yeah,
and they offer premium. So, and the last thing I noticed, this has been happening across the globe, more and more cases of scams. So, like fake silver bar, there's been like a scandal in China like recently. There's also been like a scandal about a broker that was selling effectively like paper gold, and all these people like doing these things, they were doing it on the false premise that the price will have come down. And then
yeah,
when people like flocked to redeem their physical, they went bust. So
yeah,
actually in China currently there is a massive clampdown on anything that is speculative or unauthorized type of investment accessible to retail. So
yeah,
this has been massive. And let's not forget that the Shanghai Future Exchange effectively put tight limits on the quota that people can ask for physical silver delivery in
yeah.
China. So
Yeah,
things are not
Dario.
improving.
Dario, you mentioned earlier about, I don't know when, about 10, 15 minutes ago, about how China is also tightening on the gold accounts that the public is not getting the physical. That is worrying because that's what happened when World War One started. They stopped the gold standard and people they stopped redeeming, pound notes for gold sovereigns. because they knew, they needed the gold to fight the war. So I think that's worry in that respect. There's a super chat here. Thank you, Tolson 718. How badly could an increase in oil prices increase mining expenses? Could a prolonged war keep mining stocks down due to high oil prices? I'll answer that first, and then I'll let Clive and then Dario. Well, yes, in the face of it, it does look worse for mining companies, but I think especially in silver and in gold to some extent, they're already undervalued versus bullion. And I think once gold and silver pick up, they're going to go up a lot more than the oil price. And that's what happened in the 70s. So, yes. And I think a lot of the mining companies, they're quite conservative with, their price forecasts and what price they use to forecast their earnings. Clive?
Well, for sure, the cost of mining will rise due to the cost of energy. I mean, it must take an awful lot of energy to dig all that ore out and process it and grind it and all the other things they've got to do. So, for sure, it pushes up the all-in sustaining cost of mining silver or gold or whatever. But we have to expect that the underlying price of the metal continues to rise. And certainly over the last year, if you look at silver, it's nearly tripled. It's gone from $30 to $80, nearly 90. Well, it's 80 at the moment. And gold is up a good 50-odd% in a year and a half. So I don't think the energy costs, which are a component of the mining, because there's other costs like labor and so forth, I don't think the energy costs will have risen enough to wipe out the increase in profits we're seeing. But of course, it will have an impact, Mario.
Yeah. Uh, yeah, before I let Dario answer that, I would say that one kind of company you guys might want to look at, and it's not financial advice, a mining company are the royalty companies because uh, they don't have mining operations. They just receive the gold from the miners. So the cost of mining doesn't matter for them. They might start outperforming. Dario, any view on the cost of mining and the energy situation?
Actually, I was trying to quickly pull out a chart because I saw it a while ago, but I wanted to confirm. In 2007, when oil went up, I think to what, 140, silver went up like above 50, and if my memory is correct, the stock prices of mining company went up as well. So this is a paradox. Because silver remained so low for so long, suppressed, the way the market priced in the past 20 years silver mining companies has been based on the amount of silver they will be able to sell and monetize, so the revenues and margins. However, I would like to remind that before, like quite long ago, mining companies, especially gold and silver, were priced based on the amount of reserves that they had in the ground. So I'm not saying that we are going to quickly turn around, but what I'm saying here is that I wouldn't be surprised to be a shift in the approach of pricing the mining companies to this extent as soon as people realize that the silver price is not gonna crash anymore because the demand is steadily increasing. It's not gonna coming down because everything is becoming electrified. And as a matter of fact, companies will be rewarded and they will be priced, future earnings will be priced already taking into account the amount of reserves that they have in the ground. So increasing costs, let's not forget one thing, like increasing costs are not, they don't happen like, overnight, okay? These companies, they have a lot of reserves. They have like a lot of like, fuel reserves and whatever they can approach, they can reach and whatnot. So as I said, like for sure there is the price component of the silver, but currently at this margin, all these companies are already like making significantly more. I mean, Clive already mentioned like this year, the last quarter. Let's not forget that the average price of last quarter, if I'm not wrong, was like around 60, and they made 3 times the earnings compared to the previous year. So, I mean, yeah, people need to be careful about the proportions. Okay, like you have a massive like tank or whatever, like excavator, and the oil price. I mean, the oil price can double or triple or whatever, but it's gonna remain like, compared to the overall stock that is taken off the ground, that is gonna remain like minimal. It's not that the increase in oil price is gonna increase the number of back and forth round that they're gonna run those machines from the mine. That is gonna remain the same. So actually, it's not like a 1-for-1 type of increase. So the oil price increase in the overall scale of the economics is actually, not 3 times higher the cost. It's gonna be like, 10%, 20% higher the cost because of that. What can be a little bit worrying is the chemicals needed to refine silver, because currently still most of the silver production is a byproduct of other mining. So if they don't have the chemicals, and most of these chemicals are a result of natural gas refining, and currently 20% of the natural gas is offline. It was coming out of Qatar.
Yeah.
It's no more. And like Asia supply of gas, 80% of that comes from Qatar, actually. And we know that China refines most of the silver. But at the same time, these companies need to get all of the silver, because let's not forget, if they don't produce the goods and sell them, they don't make revenues. The companies go down. So, I mean, we end up into a situation in which like more and more there is, in my opinion, we're gonna go back at valuing miners more and more for the potential that they have in the ground, rather than, okay, let's see how much extra they can get for silver. Like a lot of silver miners, they have like, in the best case scenario, like 50% of the revenues come from silver. The others come from like coal, zinc,
Yeah.
lead, and whatever. So it's not even like a pure silver mine. So I really think there is a lot of mispricing going around. But frankly, again, the recent moves in silver miners, gold miners, even energy stocks, like defense stocks are down since the war started. It's mostly chart moves. Is the market like believes this is gonna be like a short-lived, problem? If you look at the curve in oil, it's so much in backwardation that it looks like a water park slide. Okay, that's not financial markets.
Yeah.
That doesn't make any sense, right? So everything is unbelievably mispriced, but fundamental matters in the long term. So this is my answer. It is like people should not like think 3 times higher oil means 3 times higher cost for the silver mine. I mean,
No, I
Yeah,
agree.
I'd like to add something to what Dario said about people starting to value the silver and the gold in the ground when they
Right.
haven't really been doing so for a long time. First of all, Rick Rule, who's a major investor in silver and gold mines, mini silver, he shares that view. He's very much of the opinion that the silver in the ground is not being valued correctly at the moment for those companies which have got it. But there's another factor which is at play here, and that is when you have a silver price at $30 an ounce, you might have 1 billion ounces of silver in the ground or whatever it happens to be. When the silver price is $60 an ounce, that you now have that billion ounces of silver or whatever you had before, plus all that stuff you called dirt, which wasn't worth taking out of the ground because the cost of getting it out of the ground was more than $30. Now it's $60. Your reserves in the ground have gone from 1,000 ounces or 1 billion ounces to 5 billion, because that what was previously just dirt and uneconomic to extract is now potentially economic. It doesn't mean to say you can extract any more because you haven't got any more men, you haven't got any more machinery, but it's actually extending the life of your mine, and therefore your mine becomes worth that much more because you've got that much longer lease of life, because all that silver which was never economic to extract is now economic.
Yeah, I agree, Clive. We've got one more, and there's a lot of old projects that are coming back. They call them restarts. That's because the price going up. We've got a super chat from attorney Michael Eline. It's for you, Clive. Thank you, attorney Michael Eline. Clive, based on the short-term rising dollar, does HL, is that Hecla Mining, I think, continue dropping? And for how long should I take a loss and uh, buy back in at a certain price? What is a good buyback in? Hi, Dario and Mario. So that's for you, Clive.
Well, as I said with the silver price, it all depends on how long you have ahead of you. If you're a short-term trader, you need to get out and buy back in hope he can buy back in cheaper. It's not a game I would play because you never know when it's going to turn. But trends are trends, and it's going down. So if you're a speculator and you have a very short time frame and you're ready to jump back in a week's time or 2 weeks' time at a higher or lower price, why not? I would not dare to exit, and I haven't exited at all any one of my silver mining companies. I don't intend to, because I know it's such a dangerous game. And the one sure way, I mean, I'm sure you'd love me to exit, because I know for a fact that if I was to exit them all, silver price would immediately go to $350 in
Yeah.
like a flash of an eye. I mean,
Yeah.
I have proven that over 50 years of investing, that if I ever sell 100% of something, it'll immediately go to the moon. Which is why I've got this principle of when I buy a little bit, a little bit, a little bit over a long period of time. When I sell, I'll only top slice a little bit and keep the rest, because
Yeah.
I know the minute you sell anything, it's immediately going to go up, and the minute you buy anything, it's immediately going to go down. That's just the way it works.
Well, we got another super chat, and from Keith Keithovi, thank you. FOMC this week. Yeah, it starts on Tuesday, ends on Wednesday. There will be no rate hike. Well, I don't think there will be a rate hike, but if JP Morgan, and it says JP Morgan is dovish, could this be the trigger to turn precious metals up? Darius seems bullish silver, even in the short term. What does he see as a trigger, if not the FOMC? I'll let you answer that, Clive, Darian, in a minute. I just wanted to
Okay.
add that back in 2015, it was the end of 2015 when I actually started making YouTube videos. There's an FOMC meeting at the end of the year, and that's when, for some reason, gold and silver bottomed. Gold bottomed at 1,045. I think the other thing the market has wrong is that they think central banks are going to be more hawkish because oil prices and everything are going to, well, things are going to go up in price, and that's not inflation, of course, but it is seen as inflation, and they think central banks won't be cutting anymore. But I think with all the crises going on, aside from the war, like private equity, the banks being in trouble, uh, I could see them, and the Fed is still doing QE. They've done 100 billion since the beginning of December. So yeah, I'll let Dario answer that as well.
Um, Let me, very honest here. I think that the central banks and the FOMC, as the lead of them, are becoming more and more of a sideshow, to be honest. Like, it has been like years that the central banks have been doing exactly what the market wanted them to do. So if you look at the future pricing rates, they're gonna do exactly that, because there is one thing and one thing in all that central banks surely are keeping an eye on, and that's not really inflation. That's not really like employment, whatever. They don't care about that, like, to be fair. What they care about is the financial system stability. And the financial system stability translates into keeping volatility low. So what you can rest assured by central banks is that they're not going to surprise market whatsoever. Surprise hike, surprise cuts. I mean, that is more and more of like something of the history books, to be fair. And considering how things are developing in the US, but also like in Europe is less straightforward because there is this European Union sort of thing that you never know who the hell is in charge. But in Japan, effectively, like the central banks are becoming an extension of the government, like economic agenda. So like, and I said this immediately when they claimed that the silver and gold, the precious metal prices crashes because of the nomination of Kevin Warsh, that is a oak. And I was like, if that is the case, then why didn't stock crash? I mean,
Yeah, no, I agree.
so central banks overall, I mean, everyone is still trying to, catch something or whatever. But if you look at the speech that and at the various statements, like meeting by meetings, is almost identical. They change like literally few words, most of the time completely inconsequential, and you have people writing like articles. I mean, like by training, and I did this for a very long time. I was a fixed income trader,
Yeah.
and you know, we started almost not to care about the central banks well before, like COVID, well before. I mean, because two things for a fact: they're not gonna, let the market go down. They're not gonna allow for disruptive volatility. They know the system is extremely leveraged, so volatility can be incredibly damaging, and they are more and more predictive. So still, you could see like in the days of the FOMC that the trading was like almost nothing in bond because people have still this perception that something can happen, and then at the end of the day, things don't happen.
Hmm. I
So
think, yeah, sorry, go ahead.
no, so I would say like Trump is going to be the president for 2.5 years more, and I mean that if you then they're not going to hike rates.
No, and I think, yeah, like you said, the first sniff of trouble in the financial markets, like you said, volatility is a real problem because it's so leveraged, and we're not even talking about the notional amount of derivatives, which is over 1,000 trillion or a quadrillion. That's what they're worried about. And there's one more super chat here from James Brannick. Thank you. We're certainly living interesting times. He says, Mario, you along with Clive and your many guests have been guiding light in the darkness. I'm eternally grateful to stumble upon your channel in 2022. Oh, thank you. And guys, we're gonna wrap up. We've gone over the usual hour, but I want to start with Clive. Any final words for people, how to navigate through this? Well, we are in unprecedented times. This war could evolve and spread. Hopefully, it won't. So, what would you tell people in terms
Well,
of
uh,
investment?
I, well, first of all, I think I expect some of your viewers have seen the many articles by reputable organizations, Western organizations, about the Russian shutting down of the internet. The allegation, according to the BBC and others, is that you can't. People are using walkie-talkies because they can't use phones. That they're having to use paper maps, and basically, taxi drivers are demanding to be paid, or can only be paid in cash. So all because all the ride-hailing apps are working. Now you can believe that or not believe it. It's probably spin by the West, but what it does illustrate is a hypothetical scenario which might be happening, probably isn't in Russia, where the whole internet is down and you can't do anything. So what are we going to do if the world goes into a situation where they decide that they want to censor us to such an extent and control us to such an extent that they prevent us communicating with each other, and you can't move around and get your money out of the bank, you can't find out where you're going on maps and things like that. People need to think about a world which might exist in the future where we are heavily censored in terms of what we can do through the internet. And I think that's coming. And that's why you need to have some independence through earning some of your own gold and silver.
Yeah, and maybe some cash and some do you remember the A to Z maps or
You,
A
you
to
need,
Z in the UK?
yeah, you need to have the paper maps. You need to have the walkie-talkies, um, and probably need to make sure your friends are near to you and not on the other side of the world because you won't be talking with them anymore.
Dario, any final thoughts?
My thoughts on this is that I should have been talking a lot about like this these days with my friend trying to understand, but I think the censorship is already here. It's I mean I talk to people I know in the Middle East and they're like, I cannot send you like anything. I just tell you this. You know, don't quote me on that, but this is exactly what's happening. Like, it's way worse than whatever. I think the president just came out this weekend like threatening like the media, like saying that they can pull the broadcasting licensing if they keep like um pushing like publishing narrative that is against their interests and stuff like that. And I'm like, you know, and let's not forget, like for the first time, I think in a war ever, you've seen direct strikes on data centers. I
Yeah,
mean, let's not forget one thing, like everything now is digitalized. Okay. And the data centers are vital nerves of the banking system. Okay. The banks don't have their own servers anymore as it was in the past. Everything has been outsourced to AWS, Azure, and whatever. However, they still remain local. Why? Because the regulator wants to have like these nerves, the financial system, like in their territory. Okay, so this is why you see like so many data centers around the globe, and especially banks, they need to have this territoriality. So everything runs on that. So I mean, these people already eat in the data center. We know that the CME demonstrated that the data centers can have glitches, they can be turned off or whatever, or AWS had the AI wiping out a lot of their code and they were down for multiple hours and whatever. I to be fair, that kind of situation would even be worse than COVID lockdowns. I mean, people nowadays, they cannot live without their phones. Like the youngsters in particular, they don't know a word without their phones. So I wouldn't say something that catastrophic can happen, but personally, I keep like physical and a little bit of like emergency cash and whatever, because you never know in this kind of environment what can happen. I just think that things are going so out of control. I don't think that the US administration had any idea things could escalate to this point. Things are becoming like, I wouldn't say random, but clearly like not going as planned, and they can widespread very easily. So even if you hold ETFs or stocks or whatever, remember, it's just a number. You don't
yeah,
really hold them. They are into a custodian, not even on your name. They are in the name of your broker. So if your broker goes down, and most of the accounts are margining accounts because they tell you, oh, it's zero commission. We're gonna pay you interest if you have spare cash or whatever. But if you read in the terms and conditions, effectively your assets might not even be there. They are repledged and relent in the market. So I would just say I don't think like something very extreme can happen. But I mean, I hope it doesn't happen. But the probability is not zero. So
mm,
just be safe. I be safe myself, and try try to stay put in this kind of like situation rather than you know being like the wild rider, like try to to trade your savings or whatever, to do something that you know it's gonna hurt you even more than the events are eventually going to do themselves.
No, I agree, and I would add to finish off that yes, yeah, the stock market, like you said, your holdings with brokers is very fickle. If things could happen, they could close the markets, and that's why it's good to have physical gold outside the system and even some cash. And with that, I'm going to thank Dario and Clive and all of you for being on the live stream, and wish you all a great week next week. And let's just hope, yeah, let's hope this war gets resolved soon, even though I don't think it will. So thanks again. Take care. Bye.
Bye.
Okay, I've ended the live stream. So